Let's move on to companies. I mean, time's just going by here very quickly. We're going to talk about Alexandria Real Estate Equities. I think you pulled this one out. I've never seen this one before, but what
They have a
happened?
few properties here in San Diego. I've seen them around town. I think they have one over in La Jolla that stands out. It's actually right across from like the Torrey Pines Golf Course.
Mm-hmm.
Beautiful, beautiful properties. I think they also have one like off the 56 or something as well. But yeah, they have some very nice properties. It's generally in the healthcare space.
Well, let's take a look. Their symbol is ARE. They're in the real estate industry, REIT office industry. Not much on the short side, 3.7%, 96% institutional owned. No PE ratio. Again, we talk about FFO, so that don't worry about no PE ratio. Price of sales, 3.1 versus 4.5. Price to book value, very good, 0.6 versus 0.9. Price of cash flow, 6.6 versus 10. And let's see, no earnings over the last year versus the industry. Same thing with the 5-year. Sales, unfortunately, down 1.6%, but the industry was down 16.3%. And they show a 5-year EPS growth estimate for the analysts of a drop of 2.2%, but that is far better than the drop in the industry of 23.1%. Now, you do get a dividend here. Now, the yield is 9.9%. The free cash flow payout 65.5%, so that is a positive that they seem to have that coming on through. And again, you got depreciation, other things here that you got to look at, but you got to dig deeper to make sure that is a safe 9.9%. That's pretty high. We do see on the balance sheet current ratio 0.3 versus 1.2. That worries me a little bit. Debt to equity 0.8 versus 1.1. I say current ratio of 3.3%. That's not a lot of liquidity. That could be a major concern for me. Net profit margin is negative 13.8% versus a positive 6.7%. Return on equity a negative 2.5 versus a positive 3.4. Free cash flow does look good. This can help the dividend. It's $1.376 billion versus $413 million for the industry, so that's pretty good. And free cash flow as a percent of sales is 46.2%. So what do you got going for? And that's the important part where we look for the free cash flow or the
FFO.
FFO.
Yeah. And FFO, I don't know if you already covered it, stands for funds from operations. Gives us a better idea than earnings for a company since, they're going to have depreciation. That's an expense to a higher magnitude a real estate company would have than a non-real estate company. So we kind of look at that FFO as a better guide than earnings. But giving you the current price here for Alexandria Real Estate Equities, again, their ticker symbol is RARE. It's $53.17. The 52-week range here, the low $52.94 and the high $114.69. And this stock, it's been under pressure to say the least. Year to date, it's down 44.8%. 1 year down 52%. 5 years not getting any better, down 66%. 10 years down 37%. And it looks like they had a pretty sizable decline of around 16%. Last week after they missed earnings and then also lowered its full year profit outlook. So the market did not like that, and it took down a stock that has struggled immensely, to say the least.
Right. And you do have the FFO numbers going forward, correct?
Correct. Yeah, we go up to December 2026. I see estimated FFO for the business is $7.41. It gives us a target sell price though of $123.01. So I mean, the valuation is there on the cash flow. It's about 7.3, 7.4 times that future FFO. But the interesting thing is FFO is estimated to decline 5% this year and then estimated to decline 17% next year.
Right.
That's a big decline in cash flow. What the heck is going on? Did they have to refinance a lot of debt that is, at a higher interest rate now? I mean, that is generally not something you want to see in the real estate space. You want steadier cash flow, growing cash flow.
And we do hold in our portfolio an office REIT, which they report earnings, and they were phenomenal. Everything. It's like they're ticking all cylinders. The reaction on the street was, big yawn. Yeah. Who cares? And it's funny. I made a big deposit into my investment account yesterday, and I was so excited to do the buys today. It's like, doggone it. Our real estate REIT that we have in the office REIT is above our target buying price. I couldn't buy it today. But I think it is phenomenal what that one's doing. But we know that one very well. You'd have to dig in deeper to this one here to see what's going on behind the scenes.
Yeah, and this one, they call it a cluster strategy. So they really only focus on certain cities, like they're in Seattle, San Francisco, San Diego, New York City, Boston, Maryland. So, I mean, they're really only in those cities.
Yeah, ours is in the Sun Belt.
Yeah.
So that could be the big thing. What is it? Location when it comes to real estate. This one may not have that. So